Hello everyone, welcome back to Full Time Crypto. Today we'll be looking at the current status of the crypto market cap and try to understand basically what the effects are of the potential rate cut occurring in the coming few months. So I think that's very important as we have a lot of data available and we could use that to our advantage to really understand, okay, so what is going to happen and what has happened in the past. So one thing we can look at is the FedWatch tool, which provides us a probability of the next rate cut. According to FedWatch 2, we see that the first and next highly likely probable date is the 20th of March. And to be honest, I think that this FedWatch 2 has been quite accurate in the past in regards to rate hikes and previous rate cuts. So assuming that either late March or early May, on the 1st of May 2024 is the next rate cut occurring, we can go back to the charts and to see what the effect could be. So what is good to take along is that once we get this rate cuts, generally there's two things that could happen. So either we get a soft landing, which according to the Fed would be obviously the most desirable situation, or we could have a hard landing. However, if we look at the past 60 years, there's only been one soft landing, which is in 1994, 1995. So that doesn't really mean that we can't have another soft landing, but however, I do think we have to take this into account as to going forward towards the rate cut that's coming. So it's not really likely because we do see a lot more hard landings than soft landings. So what I've done is I overlaid the S&P 500 on the let's say the rate cuts in the past. So let's go back to 1994, 1995, the date where we had our, let's say, only soft landing that we have seen. Which is basically right here, right? So we see that this is the moment, this has been really the moment when the first rate cuts occurred, right? So we see that after the rate cuts, the market kind of went up a little bit. Let me zoom in a little bit more accurate. We see that the market has gone up after the rate cut, but that was for a very short, brief term, maybe a couple of weeks, where after we did see that the overall market has been going down. But there is one important thing here. We see that the market has actually been holding the 100-week moving average. You see that it went slightly below, however, it came back and it held up until the end of the rate cuts, the 100-week moving average. And this is a distinct difference when you look at all the other scenarios. So one of the hard landings we had was obviously in the 2000s, so the dot-com bubble. So you see that the same thing occurred here, right? The date of the first rate cuts in the 2000 was in January 2001, and even before the rate cuts occurred, you saw the market going down, and it did not manage to hold the 100-week moving average. And the same thing happened actually in 2008 when the rate cuts occurred. Exactly on that date, we see that the market went down and did not hold the 100-week moving average. So I think that's a quite interesting finding because it does show some correlation to that. We can even go back to the other in the past, to the other recessions, which basically show the same thing. For example, in the COVID crash, it did not hold the 100-week moving average, and we saw the same situation in which we recognize a hard landing. And when you look at the current situation, you see the same thing again happening. So if we expect the first rate cuts happening on the 20th of March, which will be approximately right here, we could see a situation where the overall market goes back down to the 100-week moving average, and this might be a little bit too optimistic, and we could see that it either lands on the 100-week moving average, holding it, making it a soft landing and still continuing up, or we could see it going down and recognizing again and a hard landing. So we can do the same thing at the crypto market cap, and here we also see the correlation between the rate cuts and the let's say the impact on the market itself, right? So rate cuts happened in July 2019. The market went down. We saw a hard landing. It went below the 100-week moving average, and that's what happened. So now I think the question really is, so what if we have a hard landing? So if the rate cuts occur, the best scenario in my opinion would be that we hold the 100-week moving average, and that would be, let's say, the next level to watch. So however, if we do not hold it, what could happen, right? So we don't have enough data on the crypto market cap, but we do have much more data on the S&P 500. We're gonna measure for each hard landing to see how far down we basically went. So in 2000s, in the COVID crash, 23%. In 2009, it went below 52% from the 100-week moving average, and in the 2000 we saw 43%. Right, so it's quite significant in my opinion. So the most, let's say, comparable time period would be the 2000s. I'm sorry, 2020. And if we look back at the crypto, so S&P went down by 23%, and Bitcoin went down by approximately 44%. So it's basically the double in terms of S&P 500, which does make sense since Bitcoin is much more volatile. So in my opinion, if we don't hold the 100-week moving average, meaning we were gonna get a hard landing, I think the level that I'm personally watching is back to the previous lows, which is around 16K in Bitcoin value. So this is the next level to watch in case of hard landing. I don't see it really going below that. So yeah, I think that's it for today, guys. There's two levels to watch: the 100-week moving average once the rate cuts occur, or in case of a hard landing, we could see far below that, so previous lows. If Bitcoin could drop from the current level by 60% potentially in case of hard landing, you can only imagine what this can do to the altcoins. All right, guys, if you like my content, make sure you subscribe so we can continue these videos. I'll be trying to upload every week, at least once, if not more.